Welcome back to Business Boone, a product of the Boone Chamber and hosted by Deepen Talent Strategies. I'm Shauna Lake.
And I'm Lauren Byram. And today we are joined by Aleasha Boling with Parr, Richey, Frandsen, Patterson, and Kruse. So thank you for being here with us today.
Thank you for having me.
So we are going to be talking about the legal structures of a business, and Aleasha's going to give us her insight on what that looks like. So let's jump right in. So one thing we like to ask all of our guests on the show is, if your life was titled a movie, what would that title be?
So I actually asked my kids, I presented this question to my two kids and asked them what they thought I should say. Because I'm not very good at these kind of questions. And their names are Austin and Riley, and they were like, "Oh, it should be called the Austin and Riley Show." And I'm like, haha, very funny. But then I'm like, you know what? Accurate. That's pretty accurate.
Sure, yeah.
Because, my life kind of, as it should, revolves around them at this point for the most part.
Yeah.
So I guess that's my answer. They actually gave me a decent answer.
I think that is a pretty good answer.
Yeah,
As a
agree.
mom, I would think that. Yeah, that's about right.
Yeah.
Yes. Well, thank you, yes, for being here. And I'm looking forward to this conversation as a business owner.
Mm-hmm.
There were some decisions to make when I started my business about what that legal structure should be.
Mm-hmm.
As we dive into that, can you tell our audience a little bit about yourself, your professional background, and the focus areas of the firm?
Yeah, absolutely. So Parr Richey had actually started in Lebanon, Indiana, in Boone County, in I want to say 1899. I mean, it's been a very long time. And so we still have one of our two main offices is there, and so we serve a lot of Boone County needs, just by virtue of being there, local. And then we also have an office that is in downtown Indy, which is where I work. And we have attorneys in both offices and do kind of different things in both offices. So my section of the firm is what we call our utility business law section. And so really kind of Parr Richey's initial, we'll call it claim to fame, would be utility law, which is kind of a really specific and kind of specialized area of law. And so we do a lot of that still. So some of my clients are electric cooperatives and small utility companies, which by the way, also businesses.
Yes.
So, those are really business clients too. They're just also utilities.
Yes.
And then we also do have a lot of clients that are businesses that are not utilities as well. So, mainly small businesses. They could be local to the Boone County area, or we have clients that are not local to the Boone County area. And so that's sort of where these questions really come into play about how to set up a business and maintain it and all of that. We do a lot of different areas. Businesses always need all kinds of areas of law. So they might have employees and they might need to know how to comply with employment law, or they're always entering into contracts or buying real estate. And so we kind of help them with all of that as well, in addition to kind of what we're going to talk about today, which would be the corporate governance and the corporate organization part of it. So that's a really big part of our firm. We also represent some local government kind of entities. We represent we do some zoning and things like that. Trust and estates, and then we have a really big section of the firm that does plaintiffs personal injury work as well. So we're kind of run the gamut as far as services.
Yeah,
Sounds like it.
Mm-hmm.
A lot of different focus areas. How many attorneys are there? How large is the firm?
We have 15 attorneys.
Wow.
Yep.
That's a lot of work.
Yeah.
For 15 people.
Yeah. So we try to keep on top of it. I mean, we're very busy, but I guess you can't complain about that. That's a really good thing. So, but yeah, we have, I believe, 10 partners and then some associates as well.
Great.
So when somebody is thinking about starting a business or even an existing business, what are some things that they need to think about from a legal perspective when they're going to be starting or need to look into?
Yeah. So the main part of a business, or one of the main purposes of business, really is to protect yourself from liability, from personal liability.
Yeah.
So oftentimes people will start a business, even if if it's only going to be a one owner business. So they're not going to have employees, or there's only one owner, and they still go out and they'll form a business entity, and that's going to protect them from liability if the business does something wrong.
Yeah.
Or, someone sues them, as people do from time to time,
Sure.
then, that person would really only be able to access the assets of the business and not the personal assets of the owner of the business.
Right.
So that's a really big reason that people form businesses. And so one of the things to consider, obviously, with that would be, who needs to be protected, who is part of this venture that, needs to be protected from liability. Also, along with that, you, in addition to protecting individuals from liability, it shields you from all of the business losses. So if you have, multiple people who are owners of the business, you're only going to be usually responsible for the losses incurred by the business, like to the extent that your ownership interest is. Same with profits, so it goes both ways. But you really need to think about who are the people you want involved and why do they need shielded from liability or from loss or whatever, to know really what is the main reason that you want to form this business. So that's a really big consideration. Tax treatment, businesses, people form businesses to help with income tax purposes. Maybe they want, something to be taxed at the corporate income tax rate and not their personal income tax rate, or maybe, just different ways that you can structure a business tax-wise would be beneficial financially for people. So that's one thing to consider, and really you need to, a lot of times, work with your accountant on that. There are tax attorneys. I am not one. So I always tell, my clients, if it's a tax question, really your accountant or your financial advisor is going to be able to direct you on what would be the best option for you. And then an attorney can direct you on how to make that happen, or what needs to be filed, or how to comply with the tax law once you've made that selection. So, you need to think about how you want the business to be governed. Do you want to have an outside management for the company, or is it going to be small and you are going to be the owner and also the manager of it?
Yeah.
Are you going to have employees? What do you really want that to look like? Because that's going to also dictate how you structure some of your governing documents of your business. And, if you do have employees, obviously you need to think about how are you going to comply with employment laws? How are you going to compensate them? Those are all kind of getting into, kind of the substance of how the business is going to run, more so than how you're going to actually set it up. But those are all important things to think about.
I agree.
And then if you want to do an LLC or a corporation, there are differences in the two. Most of my clients, I'd say a vast majority of my clients, if they're going to set up a company, they're doing an LLC. It's a lot kind of streamlined, I would say, from what a corporation would be. There are fewer record-keeping requirements. There are fewer filings that you have to make, or I say less substantive filings maybe that you have to make with the Secretary of State. And you can, kind of still determine how you want to be treated tax-wise with an LLC, fewer reporting requirements and things like that. So it's just more flexible to do an LLC. When Indiana allowed LLCs, it was under the Indiana Business Flexibility Act. So the whole purpose was to kind of open that up for people. So most of my clients do LLCs. You can form a corporation as well. You need to kind of put some consideration also into which form, of business would be best for you as well, based on just reporting requirements and record keeping and things like that. So
What's the difference between an S Corp and a C Corp?
that's really just the way that the business is taxed.
Okay.
So a corporation can be taxed as a C Corp, which is kind of the default. So if you form a corporation and you don't make any other tax elections, you're going to be treated as a C Corp. And so that really means that your business is going to pay income tax on its earning or on its profits, on its revenues. So your business makes money, your business pays income tax on that money at the corporate tax rate. Then if your business distributes dividends to its owners of profits, the owners will also pay income tax on personal income tax on the dividends that they receive. So a lot of people say that if it's a C Corp, it's really getting double taxed.
That's what it sounds like.
Yeah, so there's reasons to do a C Corp. S Corp is not necessarily available for every business. So if you have a lot of shareholders, I think it's more than 100, which, I mean, a lot of small businesses obviously are not going to have that. But if you have a lot of shareholders, you have to do a C Corp. If you have foreign shareholders, you have to do a C Corp. So sometimes an S Corp is not available, or there may be other reasons. Again, working with your tax or your accountant or financial advisor, that they help you determine it would be better to do a C Corp. Then you might choose to do that. But a lot of people do choose to do an S Corp, which is really just that the corporate entity is not taxed at all. It just passes through to the owners.
Okay.
So any profits of the corporation do not get taxed at the corporate level. They just get kind of divided up among like whatever your ownership percentage is in the S Corp. And you would be responsible for that tax liability on your own personal income taxes as the owner. So, and then LLCs can be treated kind of either way. They're not called S Corp or C Corp, but they can also be treated as a pass-through entity similar to an S Corp.
Okay.
Or they could elect to be treated as a C Corp, and the LLC can be taxed, and then any dividends could be, or distributions could be taxed to the members.
So it seems like LLCs actually have the most flexibility
Yes.
if they can,
Yeah.
if they choose to go the LLC route.
Yes, absolutely. And there's just different, I keep saying reporting requirements, but you do when you form a business either way, you have to file things with the Secretary of State. That's how the business is considered, established or like a legal entity is once that document is filed, and the Secretary of State acknowledges that it's filed. It's a pretty simple process for either a corporation or an LLC to sort of file that form. So you're going to either file articles of incorporation if you are forming a corporation, or articles of organization if you are forming an LLC. Both are really just a form that you submit on the Secretary of State website, but for a corporation, it's a little bit more involved in like what you have to put on the form. So you might have to put your shareholder or your board of director names and like the officers of your corporation, their names and their addresses and things like that. And for an LLC, you don't really have to put a lot of that. You just have to put who is the principal officer, what's the registered agent. So every business has to have a registered agent in Indiana. And of course, I'm only speaking from the perspective of an Indiana attorney, because businesses are formed at the state level. But every business in Indiana has to have a registered agent in Indiana. So you have to put that on the form. But really, that's pretty straightforward. And then as far as like a corporation and kind of its record keeping, it can be a little more involved. If you have shareholder meetings, you have to make sure that you keep the minutes. You have to so it's just either way, it works out the same at the end for the most part. They're very similar. There's just LLCs are a little bit more flexible, a little bit more lenient maybe on some of the requirements that you have to do, some of the corporate formalities that you have to follow. So.
It's all very interesting, and I know it's cumbersome for a lot of business owners to figure out which one to do. So, thank you for explaining that. That helped me out for sure.
Yeah.
So, what are some other legal or general business advice that you would give to somebody that's going to be starting or opening up a business?
I think that something that people don't really realize when they're starting a business is really just how separated you have to keep it from your personal finances, records, whatever. So, there's a concept with a business, and as I talked about earlier, of protecting yourself from liability, from personal liability when you have a business. Right. So if you form a legal business entity with the idea of protecting yourself from personal liability, if you fail to kind of keep those two things separated, then especially financially, if you have your personal income and then you have the business income and they're all in the same account at the bank and you're mixing your accounting records and you're not keeping track of anything, which is easy to do if you are a sole owner of a business, I would imagine. I mean, you have to really make sure that you're keeping track of that. And if you don't, then one of the things that can happen is if your business did something and got sued by somebody, they could what is called piercing the corporate veil. and this is the same thing for an LLC.
That sounds terrible.
Right?
Yeah,
I know, it does.
It really does.
It's like one of those law school terms that you're like, what? But, so, or piercing the LLC veil or whatever. But basically that means that you lose those protections of the business kind of shielding you from personal liability.
Because you kind of did it 1st
Mhm.
by commingling things.
Absolutely.
Yeah.
You have mixed up yourself with the business too much. Now they can come after you personally as well as the business. So one thing that I really always tell people is like, make sure that you keep very like impeccable accounting records, tax records and all of that with your business, and you do not commingle them, because that's going to cause you problems in the future for liability wise.
It's good to know that Boone REMC is always there. For generations, we've powered the growth of our neighborhoods, businesses, and everything in between. Today, our commitment is stronger than ever to provide affordable energy you can depend on and keep you connected to what matters most, now and for generations to come. Boone REMC is a Touchstone Energy Cooperative, your source for power and information.
And the other thing is, sometimes it seems really silly when you are like a sole member LLC and you have to do a resolution of the LLC members to take action as the LLC when there's really just one person. And it's like, how do you do a resolution? Right, I resolved to do this. It seems really silly, but all the time with my clients, I'm like, you gotta you gotta do it, because you have to keep the corporate records. If you don't follow the corporate formalities, that's another way that we can have our corporate veil pierced, or, so.
Well, what comes to mind is like the people who are working, like who are a plumber or a maintenance person or something like that on the side going and fixing a house. Like there's a lot of